one of the arguments I put forward in the Monday Switzer Report was that I thought the banks, if you're a long-term investor, looked like a pretty good buy. And we know that in America, the US banks really had a big rise. Now that followed Moderna's trial of a vaccine, which really was really well received. Moderna's share price went up 20%. And we started seeing those sorts of stocks that are leveraged to a better than expected economic recovery, and banks are the classic one. So if we get out of this earlier than possible, well, then banks have been asked to do a lot to help the recovery. And also, they've been asked, basically, interest rates are lower than expected. All these things work against the profitability of banks. But if this gets over and done with quicker than possible, well, then the bank's outlook and all those provisions that they put out last week, which are very, very scary, they could be chopped in half, and dividends could be partly restored. And as a consequence, their share price would go up. Now, yesterday, that happened in Australia. The banks started to make a move in the right direction. But then overnight, we've discovered that those Moderna trials have not been given as big a tick by, I guess, the more objective analysis. The information came out via a press release, and this is not the best way for information to come out. It means that there are question marks over it. It could prove to be absolutely right. At this point in time, Moderna's share price has dropped 9%. They rose 20% yesterday. So you can see they're sort of betting and taking it a bit back. So I think banks' share prices will probably fall today, and the stock market will be down because we rely on the big four banks in particular to drive the index.
So the catalyst of yesterday's rise and today's likely fall is that vaccine, Moderna, a potential vaccine.
Yeah, and what it links to, Peter, is this: the chief equity strategist for Wells Fargo, which is a significant bank in the USA, a guy called Scott Breen, he actually said on Business TV that there's a very good chance that the US, wait for it, will be out of recession by the end of June. Now, that's, to me, is even... For an optimist like me, that's crazy. But his thinking was probably, okay, if a vaccine comes along faster than we expect, they think the worst for America will be over by June. Now, that's really at the optimistic end, but still he's a significant player in terms of the commentariat in US business circles. So it's not coming from a complete nincompoop. So that's what I think the bets are going on. If something comes from left field that fixes up this quick, than most people expected, the stock market will boom. If it doesn't, and we have second wave problems, the stock market will go down. But on that same point, how far can bank share prices go down from here? I don't think very much at all.
Well, I mean, it does stand to reason that that most of the banks lost half the value on the share market. So you'd think that eventually, and long term here, that they'd regain that lost ground. I mean, the exception being Commonwealth, but that was a far more expensive share price.
Yeah, well, Commonwealth was around 95 or so. It's now, 58 or so. But the example I always use is during the GFC, CBA was 60 before the GFC, went down to 27. Those people who had the guts to buy CBA then, last year were on a dividend yield alone of over 17%. Because, the dividend grows over time, but they bought it at such a low entry price. So I think a lot of people who are thinking about, are the banks for a good buy now, as long as you have a long-term perspective, I think, A, the capital gain will eventually come, but B, the dividends will return, and there'll be a fantastic yield for those players because they're good quality companies. They're still in the top, probably the top 20 or 30 banks of the world.
What about oil stocks today? What are you thinking?
Well, oil's had a nice rise, and I think if you've been looking at Woodside and companies like that, they've really done well. I think, look, I believe by the end of the year, if an economic recovery comes in quicker than expected, so we go back to where we started from, I think the oil price will keep rising, and that will be good for those sorts of stocks. But once again, we're in that kind of question mark zone. Will there be a second wave? And second wave will really damage the economic outlook and therefore oil prices.
But don't you get the feeling, Pete, that if there is a second outbreak, and the government seems fairly confident at the moment that when these spot fires emerge, they'll be able to get on top of them. That's the hope anyway, hence avoiding, a huge shutdown. I feel like it'll be too damaging to the economy if there is a second wave and there is a second shutdown. So, the point being that we're just going to have to try and live with it.
Yeah, exactly right. And I think the government will become very restrictive. Like certain restrictions will be placed on certain people, or even maybe even certain areas if the problem is so scary. But I don't think they'll go for total lockdown again at all. But once again, this is why stock markets live and die on uncertainty. We really don't know.